Let's now get more analysis on the oil market with Carl Larry, the president of Oil Outlooks. Carl, thanks for joining us tonight.
Hi, Michelle. Thank you for having me.
So, Carl, OPEC deciding to keep production at 30 million barrels per day. Iran warning that it would increase production as quickly as possible once those sanctions were lifted and would ignore OPEC restrictions. What are the implications of this?
Well, I mean, there's a balance that they have to strike somewhere in OPEC where they understand that there's quotas that need to be met and quotas that have to be pulled back to make sure everybody's at the right level. Obviously, the key here is to make sure that prices are going to be stable and they're going to be at a good price for everybody within OPEC. So that does put a little bit of pressure on the rest of the countries there, but also, it does create some tension here with Iran. But the main thing that they have to remember here or think about is the price of oil. Where is that going to be fair to everybody who's producing?
Well, as we just said, the oil minister of Iran told reporters that even after sanctions were lifted, it would raise productions to its former level of 4 million barrels a day. And, quote, under any circumstances, even if the price falls to $20 per barrel. So could Iran going rogue pull down oil prices, or are their quantities in the grand scheme of things too small to make much of an impression?
Well, if they got back up to around 3.5, 4 million barrels a day, it would definitely make an impact on the market. We'd actually see prices come off pretty hard. But again, there's a lot of pieces to this puzzle. What does OPEC do? Where does the validity of OPEC come from there? And how does the other countries, especially in the Arab nations, react to this? The price of oil is as important to them as it is to everybody else in the world.
Right.
Their budgets depend on it.
And you mentioned the other oil countries. As we know, Iran is typically always at odds with Saudi Arabia. If there is a showdown between Iran and Saudi Arabia, another very prominent OPEC member, could Iran possibly be kicked out of OPEC?
I've thought this for some time, that it's not just about Iran getting kicked out of OPEC, but it's the validity of OPEC itself. It's, when they're pumping at capacity, which they are pretty much right now outside of Saudi Arabia, it's really hard to say, what you can't do anymore. They lose a lot of the validity, once we start seeing demand this high. But this Iran throws everything out of sync here. So yes, they could get thrown out. We could see some kind of disillusion. We could see, a lot of infighting once this happens.
Right. Well, meanwhile, here in the U.S., we saw that crude supplies have expected to drop somewhat. What's the impact of that?
Well, we're finally starting to see oil production meet oil demand here in the U.S. We're starting to run more crude oil. I think we were up to 16 million barrels a day today. But also we're seeing production of crude oil. It's been the second week in a row that U.S. has produced over 8 million barrels a day. We're finally getting that balance here, and we're starting to draw crude oil. But now we have to wait for the economy to keep going, and keep moving forward and get that demand growing.
So between the U.S. supplies and the situation with OPEC and Iran, what are the implications for consumers? Oil has been relatively steady at about $97 per barrel, U.S. light crude in the U.S. What does it mean for consumers in the U.S. and in Europe with regards to prices at the gas pump?
Well, I think that they'll stabilize. We'll see not so many spikes and also not so many drops in the prices, which is good for the U.S. consumer. What we need as a consumer is consistency rather than lower prices, or for not higher prices, but consistency, and we'll see stable prices. That's probably what we'll find out here.
Now, meanwhile, you say in your notes that you're seeing a disconnect between the U.S. oil supply and the rest of the world. What exactly makes you say that?
Well, I mentioned earlier, U.S. production for crude oil is at 8 million barrels a day, and it keeps growing. That, Michelle, is 3 million barrels a day higher than we were just 3 years ago. And our imports have dropped off about 2 million barrels a day for the last 2-3 years. So we're really starting to depend, or becoming oil independent, and actually moving away from foreign dependency for oil. So what's priced outside of America and what's priced inside of America are becoming two different things.
Well, how much is fracking and natural gas involved in America's energy independence?
Well, fracking is a big thing. And again, the last 2 years, we've seen oil production in America go from 5 million to 8 million barrels a day. And that is the cause of a lot of this fracking that we've been doing. So as the technology improves, as we see more land developed in this fracking, that production is going to keep going higher.
Okay, well, we'll see where we're at. Oil last high was $148 a barrel back in 2008. We're going to have to leave it there. Thanks so much, Carl Larry, president of Oil Outlooks.